Welcome to the Community Forum. My name is John Goliatino. I'm your host. This evening we're changing gears and we're going to be talking about something that's very taxing to us, and that is taxes. Once a year we all have to go through that ritual. I mean, some of us pay quarterly taxes, but for most of us we have to go through this once a year, and that's once too many times for most of us. In any case, one of my crew people, Anthony DiCaprio, is a tax, he'll tell us exactly what his title is, but he does taxes, and we're going to get into a taxing situation on this show. So welcome to the show.
Thank you, John.
Before we get into this taxing situation, give us a little background on yourself as to how you got into taxes, how you came up here from Texas at one time. It's hard to believe an Italian from Texas, but here you are.
Yeah,
so.
that's true. I moved to Danbury in 1985 from Richardson, Texas, and I was in the corporate world, and I had moved all around the country, and when I moved to Danbury, my wife and I and the kids fell in love with Danbury, and we decided that this was it. So I slowly started to transition from the corporate world to running my own business. And one of the things that I did was I started a tax preparation business, and it was in 1985. And that has been going on ever since, and I keep growing that business every year. But the kids are now grown and moved all over this great country of ours. And in addition to being a tax preparer, I am also an elected official in the city of Danbury. I'm a zoning commissioner, and I've been so since about 1988, I believe. Or 1990, maybe 90 or something like that. It's been so long I can't remember. And also I am a Rotarian, and I've been a Rotarian for the past 8 years. I was in the mortgage business for the past 20 years. And
you've been involved with this show since the start,
and I am also, I'm also a cameraman for the past 14 or 15 years.
1995.
Yeah, so it's almost 15 years.
Yeah.
I am a avid member of the community. I'm in love with Danbury, and that's why I'm here.
So anyway, now we're going. And I'm glad you are here.
Thank you.
Let's get into taxes, and what are the hottest changes that we're talking about this year as opposed to previous years?
Well, since 1977, there have been 8, no fewer than, count them, 8 tax acts that have been passed by Congress and the House and signed into law by President Bush. And crazy things like the Mortgage Forgiveness Debt Relief Act, and the Energy Independence Act, and the Economic Recovery Act. But there are 2 things for 2008 that are really the most important things for most taxpayers to know. And one is the Recovery Rebate Credit, which is part of that Economic Stimulus Act. You'll recall that last May, people started getting either checks or direct deposits of $600 or $1,200 or as much as maybe $2,100, depending on the size of the family and the size of the income and all of those things. That, although it was taken based on, or it was given based on your 2007 taxes, was really for 2008. So we really have to now account for that. So when you go and do your taxes, you have to account for what they call the Recovery Rebate Credit. You have to put down on your tax form what it was that you got for your 2008 Recovery Rebate Credit.
Now, is it possible if you didn't take it last year that you could take it this year?
Absolutely. Remember what I said was that they gave you the money based on the 2007 taxes. And in some cases, if your income was too much or too little in 2007, you wouldn't have gotten it. But if your income is within that range in 2008, you will get that credit. And that can be, again, anything from $600 all the way up to $1,800, even $2,100. So if, for example, you were a $300,000 taxpayer, you made income of $300,000 or more, you wouldn't have gotten the rebate in 2008, but maybe in 2008 you only made $100,000. Then you can get it when you file your taxes in 2009 for the year 2008. So yes, there are some people.
That's only for this tax period. In other words, for this.
It's for the year 2008. We file it in 2009, but it's for the tax period 2008. That's correct. So that's one of the major issues. So one of the things that's funny, you know, doing taxes now this season for the past couple of weeks is when I interview some of my customers, I ask them, well, what is your recovery rebate credit? What did you get? And they look at me with a dumbfounded look on their face. What do you mean? And I say, well, did you get a check, or did the IRS deposit into your bank account $600 or $1,200? You recall that? Oh yeah, I think I remember that. They're not going to have the document that they need, so it's incumbent upon us to figure out what it is that they got and put that into the return so that it's calculated properly.
I'm sure most of them were thinking, geez, I didn't see any of those stray millions that they're giving away.
No, well, that's true. They're doing that too, but they don't give that to the little guy.
No, that just goes to the bankers.
That's right. The bankers get that, and the auto companies, and, but not for the little guy. No. So that's the first major impetus that we have in when doing taxes for 2009. The second major thing that has happened in 2009, it's actually for 2008 and 2009, is what they call the first-time home buyer credit. And it's a little...
Is it really a credit?
Well, no, not really, and I'll explain that. If you bought a house, a first-time house, and they define being a first-time home buyer is having owned a house within the past 3 years.
Does that count a condo also?
A condo, a house, it has to be a primary residence.
Oh, okay, because what I'm getting at is let's say somebody was in a condo and now they moved to a house. Are you still first-time house?
If the condo was their primary residence, then they have owned a house before and they can't qualify.
Okay.
Technically don't qualify.
All right.
If it was a rental property, then they would qualify. In other words, if somebody rented it out and it was an investment property, then they still might qualify if they have not owned a personal residence within the past 3 years. The IRS will give a credit of up to $7,500 to a first-time home buyer if you buy the house or condo and it's a primary residence. The dates are, you must close on the house April 9th of 2008 up to July 1st of 2009. Anytime in that time span you will qualify for this credit as long as you're a first-time home buyer. Now, I use the term credit rather loosely because in reality it's not really a credit. What it is an interest-free loan that you have to pay back over the next 15 years. So, for example, let's say you buy a condominium, and I'm going to make it very simple. A single person buys a condominium, and it's their first-time home for $75,000. The credit is 10% up to $75,000, so the maximum you can get is $7,500. So in this case, that person would qualify for a credit of $7,500. They can take that in 2008 if they bought it in 2008.
Now, when do they got to start paying that?
They have to start paying it back at $500 a year for the next 15 years in the tax filing season of 2010. So for the tax year 2010, they have to start paying it back. They don't have to pay back anything in 2009 tax year, but they do have to in 2010. And that's $500 a year for the next 15 years, starting in 2010. If they should sell the house or condo, or as long as it's their first time home and it's their primary residence, if they sell within the next 15 years and they make a profit, then they pay off the balance of what they haven't paid when they sell the home. If they do not make a profit, then they pay off the balance of what they haven't paid when they sell the home. If they do not make a profit, then they pay off the balance of what they haven't paid when they sell the home. If they do not make a profit, then they pay off the balance of what they haven't paid when they sell the home. If they do not make a profit, that loan is forgiven. Okay, so those are some of the parameters. It's very interesting to see how some of the things are playing out. For example, what happens if two single people buy a home? Well,
do they split it?
They split it. Yes, they split it. And what happens if a married couple buys a home first time and they are married filing jointly? Well, then they split it. If they're married filing separately, I'm sorry, they split it. If they're married filing jointly, they get the credit. The credit can only be up to $7,500 a household. So the important thing to remember, though, is that it really is not a credit. It is an interest-free loan. And it can make quite a difference in your 2008 tax return.
I was trying to think of something that would stump you, but we probably got an answer. Like if two couples bought a home and one were, one were first time and the other people weren't, then the people who were first time.
Then the first time buyer would get the whole credit.
Yeah.
Yeah.
They get the whole credit.
They would get the whole credit.
Even though there's four people buying, let's say a two-family.
That's correct. Okay. Yeah. Yeah.
Okay. I figured you had that.
Yeah, and even if there are two people, two single people that buy it, one can take the whole credit and the other would get nothing. In other words, you can't duplicate.
Depending on the money you put in.
Depending on the money you put down, and there are income limitations. If your income is over $75,000, then it starts to phase out. That credit starts to phase out.
Over 75.
Over 75,000 for a single, 150,000 for a married filing jointly. So, but for most people, it's a very, very good interest-free loan.
Right. Now, there's other things we should, the credits that are available and what have you. Like the car loan, not the credit. The credit for a hybrid, right?
There is a hybrid car credit, depending on the model, the make and model of the hybrid car. I think the Toyota Prius is all used up, but there are several other ones that, and the IRS gives a quota to each manufacturer and each model as to how many they can sell. And once they're sold, the credit is no more for that particular model. But there are models out there that do get the credit. The important thing is if you plan to buy one of those hybrids, make sure that you check with a tax professional to determine if that model is already used up. If it's used up, you will not get the credit.
Right.
Okay? I mean, that's really...
So Toyota's used up, but maybe Honda's not.
Yeah, and Toyota has other models that are still, and you can still get the credit on.
Right, right.
But Honda may have models, and Nissan may have models, and even the American auto manufacturers have hybrids that you can get the credit on.
Because they were late, but they got them now.
Yeah. Yeah. Absolutely. Yeah.
So if you're contemplating a car with the deals that are out there, and you go with a hybrid, the government's helping you there too.
That's correct. You should always determine if you are able to get the credit with the model that you're buying.
Right.
And that should be one of the decision makers in your thought process.
Right. Then there's energy. Well, the energy independence have to do with employers. That gets an employer to put solar panels on the roof.
We talked about 8 acts since 2007, and many of them are really for big businesses and medium-sized businesses, and some small businesses too. There are some acts like that. The act that you mentioned is really for employers, and they get some rebates on FUTA taxes and some other taxes, and some based on production. In other words, if they produce so much on certain items, they get a tax credit. Yeah, there are those, and I'm sure there are some manufacturers that are taking advantage of those. One of the other credits, though, that does impact the individual is the residential energy credit, which they took off for 2008. They had it for 2006 and 2007. They took it off for 2008 because I don't know why, and then they added it now for 2009.
It was called a temporary lapse. And what is that? A lapse in the body's
I
judgment.
guess they thought that I guess when they were legislating they thought that,
was a
that the
hindsight.
economy was going to be better, and,
Yeah.
they realized it wasn't, and they reinstituted it.
They ran out for a sandwich and left it out.
That's right, yeah.
But what's covered with that?
Well, you can get a credit of up to $500. Actually, it's a lifetime credit of $500
Lifetime.
per taxpayer.
Okay.
And you can get a credit for Energy Star windows, Energy Star doors, Energy Star energy efficient furnaces, insulation, and qualified roofs. Those are the 5 items that you can get the credit. Many of my customers in 2006 and 2007 took advantage of that. But once you use it, it's done.
The government's going to have to legislate another credit.
I'm sure they'll legislate. They'll legislate again.
But this is an example of what they could do in this mini depression, if you want to call it that we're having.
Yes. You know what's curious is that they have, like I say, there have been 8 acts enacted in the past year and a half, and whatever they've done has not worked. I don't know why. It just hasn't worked. Maybe it's, I mean, it's just that the recession is so steep that it's really a depression, and whatever they're doing has just got to run its course. You know, that's what I would think.
Yeah, they're the fear factor.
Yeah.
You know, people get the money, instead of spending it, they pay something off, or they hoard it.
Yes.
You know, so it's the fear.
Yeah, that's what happened in the with the stimulus payments that people got. They really didn't spend it, which was what.
Or they paid off bills.
Which was what the government had in mind, to go out and spend it. But they paid off some bills, and they saved some of it, but they really didn't spend it.
Yeah.
And so as a result, the desired results were not there.
Right. Now, there's a lot of other little things that, you know, they're trying to forestall. Maybe we can get off of this a little bit. I don't know. There's not too many people locally that own a bank that you can call small, you know, a small business, so to speak. But there's been a lot of legislation to help the banks. How does that help the little guy? Has it come down to the local level, or the local banks are in pretty good shape, but does it make them a little easier on their loans? Because I've heard from some people saying that they're having problems getting car loans.
Well, I think that's really the problem. The first bailout that happened in, I believe it was October. They had a bailout of I don't know,
banks.
about $700 billion or so, and all of the banks were involved in that bailout, and that money never saw its way through to the consumer and to the small business person, and as a result, didn't have the impact that that it was supposed to have. You know, I don't want to make it a political show, because it's really a show on taxes, but the truth of the matter is that they really, that didn't have the desired results, also because
it didn't increase mortgage activity.
It did not increase mortgage activity or commercial loan activity, which is what it was supposed to do.
Yeah.
So I don't know what the answer is, but certainly that didn't work.
Right.
Now, what they're going to do now, I think if they don't put enough pressure on people to do what they're supposed to do with that money, then it's really money wasted. You know, it's not money that's well spent.
But if they did more of these credits, people would do more work around the house, and that would get the economy going.
I do believe that if they would do a little more of that, that would help. I think anything they can do to help the individual taxpayer would then help. Yes.
You know, up the credits for solar panels. You know, so the solar panels might cost, let's say, $5,000. If they're covered half the cost, if they put them in, they would certainly
even 20% of it. You know, I mean, just something to help spur on. I mean,
well, that would decrease our energy dependency.
That's
if you
correct.
put in these panels and you know, block after block.
I think that's a marvelous idea, and you know, all of the energy efficient stuff that they did give a credit on before 2008, and they started up now in 2009. Again, is very good, and if they could expand on that and make something, make it a little more enhancing, try to get a little more out of it, and try to do a few more things that are maybe a little out there, you might get some more response. You might get, you might get to save some energy.
So most of the information we've dealt with has been very interesting, but there was something that was a little disturbing to me, and that is by 2011, stockbrokers have to do something that they weren't doing before.
Yes.
That we were talking about it before the show started.
Yes. You know, for the past, I don't know, 100 years or so,
right.
On capital gains, sales of securities, they would, the brokerage houses would have to report the sales price to the IRS. And then it became the responsibility of the taxpayer to report the cost basis. And you pay tax on the difference between the cost basis and the sales price. So if you buy something for $100 and you sell it for $200, you're going to pay capital gains tax on that profit of $100.
Right.
Okay, and it was always left up to the taxpayer. Well, starting in 2011, the brokerage houses are going to have to supply the cost basis as well to the IRS. So down the road,
it's not just the sales price.
Not just the sales price.
Yeah.
It's going to be the sales price and the cost basis. Okay, now it's really the same thing when they report it, but they're going to report it. They have to report the cost basis moving forward. So when you report your capital gains,
if there's a different number, you're in trouble.
If it's a different number, they're going to question you. They're going to say, hey, wait a minute, we're showing that this cost basis is 100. You're saying it's 200.
Right.
And that's not right.
And if that number is big enough, you're going to be up at the slammer.
Yeah, that's right. And over the years, I've had many customers that they became day traders for a period of a year or so, and they never reported anything. And they they may have had a couple of $1 million in trades, and it's not really very difficult to do. If you trade buy and sell in the same day, and you do 1 or 2 trades a day, and you continue that for, let's say, 200 days a year, your trades are going to be in the millions. So the IRS only got the sales price on it. They didn't know what the cost basis was, so they billed you for the entire amount and put the cost basis as zero until you went in and told them what the cost basis was.
Right.
But that's going to be all over, and I'm going to say maybe, 5 or 6 or 7 years, everybody's going to know what's going on. Big Brother is going to know more of what you're doing.
Right.
And that's the way it is.
That's just the way it is.
Yeah.
Now, a lot of people out there in the last 5 minutes, we got to go, have small businesses. Let's talk about what they may be able to deduct. We were talking about, let's say, someone with a small business run out of the house, has an office in his house or whatever. He said something about $250,000 can be written off.
Yes, one of the acts raised the what we call the Section 179 deduction up to a maximum of $250,000 for any given year. So what that means is that if you run a small business, and let's say I don't know, you have a printing business, okay, and this piece of machinery that you have costs $250,000. Before, you'd have had to take the use of that piece of machinery and divide it over a number of years, whatever it was, maybe 8 or 10 years, whatever the useful life of that, right? Yeah. And you take 1/10 of that each year. Well, at Section 179, you can take the whole thing in 1 year if you so desire. Which makes a lot of sense for small businesses so that they pay less tax in 1 year, but then they'll pick it up again in future years. But if you
sell a business in 5 years, they're going to
they're going to recapture the part that's not that's not used up. That's correct.
All right.
So that does help small businesses. Also, for small businesses that are just starting, you've got you have what they call startup expenses that can go up to $5,000 for a small business. So for somebody that wants to start a hot dog stand, for example,
That they could pay for the cart.
They can pay for the cart up to $5,000 the first year and write it off just the first year with no depreciation.
Yeah.
And no recapture either for that first $5,000. So again, there are some things in these acts that do help small businesses.
I can't help myself. Hot dog, I say that.
Well, the problem with hot dogs is that we don't know what's in them.
That's a double-edged sword.
That's right.
Okay, but so hey, that's one good thing. Now, is it better off filing if you owe money to go and do your taxes early, but then not send it in? Or
it is always better.
Okay.
To file as soon as you possibly can. As soon as you've got all your documentation, it's better to file. For a couple of reasons. Number one, if you wait till the last minute, it's going to be hard to get a tax preparer to be able to do it on time. Therefore, you'd have to file an extension. If you file an extension and you owe money, you're going to pay penalty, interest, if you don't pay that right on the 15th of April. So that's one reason you should do it. And the other reason is, even if you do owe money, let's say you have all of your documents today, and you were to come to me and you were to say, you know I owe $10,000 or $15,000, so I don't want to file until the last minute. My advice to you would be to file it, and don't pay until April 15th. All right, this way you know it's done. The IRS knows it's done. You're not going to have all of the trouble, and if you know exactly what it is, you'll have some time. You'll have up to 60 days or so to gather that money so you can pay it.
Right.
If by chance you can't pay it,
you can use a credit card, right?
You can use a credit card. You can borrow it, and even if you can't borrow it from a bank or from another source, you can make an installment arrangement with the IRS.
Right. But don't go to a loan shark.
I was going to say you may be better off going to a loan shark, but that's not true.
Yeah.
But the IRS charges some pretty good interest,
right.
And they're in the 14% interest, 12 to 14%. I guess we're out of time.
Yeah, we're out of time. They're
All
waving to me, so I want to thank you for coming on the show.
Very good. Thank you.
And I want to thank the viewers for tuning in the Community Forum. Tune in next week, same time, same station, and we'll have another interesting program. Good night for now, and we'll see you then.